All right, crypto crew. I got many bears on my six right now. I just let off some flares, did a vertical, but I got a GAN trader that's behind me, and he's telling me when the time is up, the market's going to flip. There's no ifs, ands, or buts about it. It could really be a major reason why he's so nasty in his comments. I mean, GAN was never proven to be reliable, right? But everyone's calling a bear market. Everyone's saying the top is in. Everyone's saying that the cycle's over. But I'm saying, hold it. I got some receipts, okay? And I'm thinking that global liquidity is about to explode. We got Fed repo inflows, Treasury general account cash coming in, China and Asia stimulus. We got credit easing. We got Vanguard, Schwab, Merrill all entering the crypto space with the CFTC green light. Bitcoin already made new highs with absolutely no liquidity fuel. And altcoins haven't even touched the runway yet. So this is not the end. This is the beginning. This is the setup. So welcome back, Crypto Crew. It is your boy Tom here bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And make sure you come on over to X and follow us on X where we talk about Bitcoin, crypto all day, every day because we are crypto maniacs. All right, look, every time I try to actually do a short little video, I say, well, if I say this, I got to say that. If I say this, I got to say that. We're going to dive deep in today. It's probably going to be a little bit long for a Monday, but probably not really long for me. I average about 25 minutes. But anyway, before we hit the charts and get into it, I want to make sure you understand that something big is coming this January, and we're going to be launching something for you guys that's going to be absolutely phenomenal. So just stay tuned for it, and let's get into the charts because I don't want to take too much time. So we got everyone yelling bear market right before liquidity detonates, and let's break it all down. Now, if we look at the marketplace itself, like I said, what do we have going on for us right now? Well, as I said in the open, which is very important, this is something that hasn't ever happened in our marketplace, right? When we're talking about we had Bitcoin moving upward to extremely high levels of price, like 126,000, we didn't have nearly the players that we have now. Okay, and what am I talking about? Well, I'm talking about who? I'm talking about the CFTC came in and said they greenlighted this thing. What else am I talking about? I'm talking about good old Charles Schwab. They're involved. We're talking about Merrill. They're involved. We're talking about Vanguard, they're involved. BlackRock, all the major players are involved. So there is something that is really happening in the marketplace that I don't know. I don't understand why everybody's discounting this. And I may be wrong. Maybe they're right, but I don't think I'm off. So right now, as it stands, we got Fed repo inflows that are surging. Now, when repo inflows rise, banks are preparing for risk-on behavior. Now, they do that by looking at one market that really nobody pays attention to, credit default swap market. All right, so now that's an important marketplace. I'll introduce you to that today, something that you probably never saw before, because I was looking at that as a old bank guy, and I started seeing that, when the rise, well, and I'll get into it. I don't want to we don't want to get too far into the weeds yet. Let's build the basis, right? So we got repo markets that led Bitcoin by 4 to 6 weeks. Repo inflows just hit their highest level since April. Now, that was right before Bitcoin's last explosive move upward towards the 126,000. Now, we got the Treasury General Account, aka TGA. That's pretty cool, right? Preparing to inject cash. So the Treasury General Account is rising. Historically, that means Treasury is preparing to spend. Government spending equals pure liquidity equals Bitcoin fuel. Now, if we look at Bitcoin versus gold and M2 liquidity, we have an Asia stimulus wave incoming, okay? China and Korea all preparing for credit support. All right. Now, we got to worry about the Japanese. They're might raise short-term rates, but they haven't made the move yet. But as Asian global liquidity is basically an engine that's behind the scenes, right? All this stuff is macro stuff. All this macro stuff is running in the background like a river while the daily trading happens. But eventually, the daily trading is going to match up with the macros. And I believe that Bitcoin is going to take off. Now, okay, Tom's a perma bear. Merlin and his group, they're perma bears. We bring the receipts, man. We're not just talking, nonsense. But anyway, so global liquidity is about to explode, in our opinion, because we're seeing Fed repo inflows, the TGA cash, China, Asia, stimulus. We got credit easing. And Bitcoin made new highs with no fuel. And alts haven't even touched the runway. I mean, if we look at Bitcoin itself, I mean, I'm going to take you over to this chart right there. Bitcoin actually made these new highs of 126,000 odd with absolutely no fuel. We were running on fumes at that time. Okay. So there was no QE, there was no M2 expansion, there was no stimulus, and there was no balance sheet growth. So, as I said, we ran on fumes. All right. Now, what does that mean? It means that imagine what happens when, the cavalry comes in, the liquidity comes in. Okay. So, alts haven't even started. Bitcoin led. Ethereum is slightly waking up right now. It's some really cool stuff happening in Ethereum right now. I mean, it's holding tight, and we're going to get into that in the short term. But the alt engines haven't even ignited yet. And this is exactly how 2017 and 21 behaved. But think about it. In 2017, we didn't have what we saw. Okay. We didn't have the CFTC. We didn't have Vanguard. We didn't have any of these guys that were like in the marketplace. It wasn't even thought of. I mean, Vanguard was anti crypto forever, right? And now all of a sudden they're pro crypto. We got Merrill. Okay, now look, think about it. Merrill Lynch unlocked 15,000 advisors saying that you can have, they're thinking 4% of crypto in your portfolio. Now, as I said yesterday, not everybody's going to jump on it. They got people that 80, 75, 80, they think it's too risky. But the younger group that have the money, that have been involved with these guys, are going to jump on it because you don't think they're sitting at the bar and their friends are going, I just made 35% in, XRP, or I made 40% in Ethereum, and they're sitting there going, oh, I was told really not to invest in this stuff, man. It's really, really risky. Soon as their advisor says, "Hey, you want to invest 4%, allocate 4% of your," yes, I do. I want to be like my friends. They're making money, and I told them, it's all garbage, right? So think about it, right? So we got, of course, the CFTC has turned absolutely crypto friendly. Oh, okay, that's my Fed rate code. There's the CFTC right there. All right, so I don't understand. This is not bearish. This market is being captured by the big boys. IBIT. It's just happening right before our eyes. You can't, be, in my opinion, long run, you cannot be bearish. Okay. Now, here we go. Let's go into let's give a little history lesson on this. Let's talk about the S&P 500. All right. We had a 6% drop. Now, underneath the surface, this has been a very odd correction through October and November. Now, why do I say that? Because on the major index level, we've seen the S&P down 6, right? We've seen the NASDAQ down 9. Now, that is completely normal pullback, especially considering the excellent performance that we've seen since April. Okay? Totally normal for profit taking, especially near the end of the year. But the interesting thing about this small pullback, if you look deeper, is that the correction caused a lot of damage in certain pockets of the market. At one point, 35% of the S&P 500 had entered a bear market down 20% or more. All right, now, if we look at it, also during the past 2 months, there's been a noticeable rotation out of speculation. Okay, now that happened because we're going to be using this right here, the Buzz SPY Index, which is, okay, so I'll get into that in a second. So there's been a noticeable rotation out of speculation with investors shifting away from more speculative companies into more like defensive, safe haven companies or cyclical companies. All right. Now, this can be seen through the Buzz ETF. All right. Now, highly speculative, very volatile. It's a favorite though amongst the traders. So, relative to the S&P, which is a broad, large cap index, we get the Buzz slash S&P. Now, this fell hard through October and November. It was down 22%. More than it did during the big positioning washout crash earlier. Now, the rotation itself, if we look at the rotation itself, this is where we get we're given the sprint of speculation that occurred between April and September. Now, I know many people have concerns about Bitcoin currently, and they're all saying they're worried about a fresh, year-long bear market, but I just don't see it. Now, here are my thoughts on it. Some people might not like me saying it, but Bitcoin down 36-40% is essentially the same as a speculative high beta US stock. That's the way the market views it. If you look at the chart, okay? So this is how it's traded for years, and if anything, it's become even more similar to a high beta stock. Now, if we talk about Fed rate cuts, they were whipsawing all over the place. We look at it, right? And the rate odds have been really all over, right? Late October, it was 95% there was going to be a rate cut. Then the expectation crashed below 35%. Now they're back near like 87%. Let's check that chart out now. I think it's 87.2 last I looked. Ooh, up slightly, 87.4. Really cool. Okay. This chart marks it all out for us. December, no rate cut, Bitcoin down, S&P down, everything down, right? Then the big catalyst when Fed President John Williams came out and said he sees room to cut rates again in the near term. That sent the signal, rate cut odds flying back to the 87 that we see right now. And risk assets like Bitcoin went right along with the ride. So Bitcoin has been basically glued to the rate cut odds that are happening right now. Now, falling odds, Bitcoin slid, right from, I'm just going to use the 110. I'm not going to use the 126. It really happened right when we were around 112, 110. And we fell to the 80,600. Now we got that little mini pump, and all of a sudden, like there seems to be some bids lower, right? The marketplace is coming in and buying the dips right now. Now, if we really look at the Russell, okay, the market breadth turned up in the Russell. So obviously, not one signal is perfect, but the breadth seen recently has been really noticeable. So if we look at the Russell, like small caps, okay, hopefully my chart doesn't spin. The Russell 2000 has been performing really well right now. And it's actually outperforming the S&P 500. And it's threatening to break out to new multi-year highs after essentially trading flat for 5 years. Now, this is an important signal to watch, because a strong Russell 2000 breakout is a sign of a healthy economy and an upturn in the business cycle. The Russell basically is the business cycle in equity markets. All right, that's why we looked at the ISM yesterday, right? We said, look at this, and we led to now. Now, okay, now I don't want to go that way because then forget it, we'll be here for an hour. But anyway, let's lead directly into what is what I'm saying is that nobody's paying attention to. All right, and it's the credit default markets, because what we're seeing is falling credit spread, falling credit default swaps are down. The spreads are lower. Rising corporate issuance, collapsing forward rate expectations. Now, this always happens before liquidity expansion, and this is where we're going to get a little wonky. We're going to get into the weeds, but you want to be the most knowledgeable trader at the bar, right? So we're going to be talking about it, okay? And this is why, AI tech surge and credit default swaps market cooling, why it matters for Bitcoin. All right. And again, I'm telling you, nobody's going to talk about this because they don't know about it. All right. So you're lucky to have me, right? Okay. Send me a box of cigars. All right. Now, crypto. Here's the part where no one understands. Like I said, where every Wall Street trader is watching. So I'm going to take you to a site where we're going to look at CDS spreads. Now, earlier in the, okay, what is a CDS spread? Well, if you come over to this site, I don't know if you could see the, we got to go micro.me charts. Okay, right here is the definition. Okay, credit default swaps, also known as CDSs, are financial instruments which the buyer pays premiums to the seller in exchange for compensation in case of a credit default. Okay, now when those actually go lower and the spreads go lower, it means that the marketplace is actually calming down and it's thinking that liquidity is entering the marketplace. Now, I'm going to zoom into 6 months on this bad boy, so we could just see the last 6 months, not the total market. Look, if you could see up in here, June 2025, the prices were what? 51.58. Now the market has been slowly moving down. We had one spike up, okay, in October. And what happened in Bitcoin in October? It came off big, right? Yeah. Yeah, it did. October 10th, right? Friday, we had the spike. On the 3rd, we had the spike. It stood up. It was actually kind of approaching up in this area of August. So, therefore, the market got spooked. It got spooked and Bitcoin fell. Now, look at what's happening right now. If we're looking at the marketplace right now, the market is actually coming off. Okay. So, excellent, 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 excellent. So what this chart is essentially saying is that higher rates, tighter liquidity equal credit stress. But something major happened because now I'm going to take you over to what happened in the AI sector. Remember we said Bitcoin acts just like this. Okay, this is the tie-in. Okay, I'm talking about stocks right now, but I'm trying to show you that Bitcoin is very similar, and that's what it's all about. So hang on, let me take you over to that right now. We had a surge in the tech sector, the AI tech sector, NVIDIA, AMD, data centers, cloud AI, suddenly growth wasn't dead, it was accelerating. Therefore, the credit market actually reacted to this going, oh, higher earnings, okay, they're going to be able to make it. Okay, because the market was very, very concerned with higher rates, especially for these sectors. Okay, now that we had basically better earnings, lower default risk, CDF spreads tighten and come off, and that cooling off of the CDS market changed everything. When the CDF spreads fall, it means investors are less fearful. Companies can refinance safely. Funding markets stabilize. Systematic risk drops. In English, confidence comes back into the system. Crypto crew, when the credit markets calm down, liquidity flows back into risk. And this is why nobody's talking about this. They don't know it. They're basically looking at wedges, bear wedges, this. Okay, yeah, short term, all right. But those markets change. Just like, you guys complained about us talking about we were in, a breakout in Ethereum. Guess what? The market changed. It really, overall, long term, it hasn't broken down. But, the breakout didn't occur. So therefore, we had to readjust. Okay, at that time we had those scenarios, no doubt. Okay, we don't baloney. We don't not just okay perma bulls. We see this marketplace as going to take off. So markets calm down, liquidity flows back into risk, and that's and what's the highest beta risk asset on the planet? Question, you ready? What's the highest beta risk asset on the planet? Bitcoin. That's why Bitcoin is basically bouncing right now off of the 80,600. Okay. And it's holding right now. Now it hasn't jumped yet because it's still digesting all this. This is a slow mover. It's working in the background. It's like the river that's flowing in the background. It's the macro flowing in the background, the river. Eventually, the short-term technical charts will match with that macro river, and we believe it's going to take off. Okay, so AI tech, didn't just pump. I mean, it really took off, right? It restored confidence in the entire global credit system. And once the credit stabilizes, liquidity always returns, and crypto feels it first. Okay, because this is the high beta stuff, man. This is where people want to get into. Now, if we look, all right, Bitcoin itself, we're going to put Ethereum, Bitcoin, everything up against the Russell and the S&P. Here's a chart I first opened with. Okay, now the correlations, the missing link in between all this, bear market fears. Okay. No, Bitcoin is not dying, and no, we are not going into a bear market, in my opinion. It is a turbocharged sidekick to U.S. equities. Bitcoin behaves like a high beta NASDAQ or Russell 2000 tech stock. Now, I'm going to give you a correlation, okay, that I actually looked up for you. All right. Now, Bitcoin to the S&P, correlation 0.65. Bitcoin to the Russell 2000 Tech, 0.72. Ethereum to the NASDAQ itself, 0.55. So when the spec rotation hits, when the spec rotation hit in October, November, Bitcoin got crushed because it's 2 to 3x leverage to risk sentiment. That's why we fell so hard. That's why when I showed you the credit swap went back up, what happened? Bitcoin got hit hard. Plus, you had also what? Morgan Stanley Capital International with that announcement, right? So you had a perfect storm. Now, did they actually plan that? Because it came in October 10th after the credit default swap market actually ticked up. I wouldn't put it past them. I wouldn't put it past them because they knew that, big traders would be looking at that going, holy smokes, we got a little tick up. Oh, we're not near the highs yet. But I'll take you over to you. Let's just look at it. Let's play with it. Maybe I shouldn't use that term. Let's play with it. But anyway, if you look at it right here, October 3rd, we had the tick up, right, from coming off the lows right here, 41, 41, 41. We went up to 44. That is a massive spike. Okay, now look, here was the if you looked at the trend line or the resistance line was 44.97. This market ticked up to 44.29, right into resistance. Now, if it would have broke that, that would have not been good at all. However, Morgan Stanley Capital International comes out with a statement on October 10th about strategy. Do not put it past them to not have seen this and go, this is a perfect storm. This is the way that we could actually drive this market down and get more control. Okay? Now, you think I'm making this stuff up? This happens all the time. I showed you yesterday. If you haven't seen yesterday's video with the robber barons, go check that video out. I think it's one of the coolest videos I did. But now, if we look at this, okay, now while the Russell right now is up 5%, the S&P is flat. So let's come back over to my chart again. So right here, the Russell is up 5%, the S&P is flat. This is the first breakout for the Russell in 5 years. Russell is the business cycle barometer. When it runs, economic momentum improves. That's why, again, we showed you the ISM, Purchasing Manager Index, right? Rate cuts help small caps. Bitcoin and Ethereum rally with it. So the Bitcoin correlation to Russell in Q4 2025, average 0.68. It stands between 0.65 and 0.75. So you can go 0.68 is the average. Now here's the twist for Ethereum. Ethereum lags Bitcoin on dumps, but catches up fast during rotations. So stablecoin volume right now is 10%. 3% today. We got DeFi heating up. We got a correlation to the NASDAQ of 0.5. All right. So let's just think about altcoins, right? Solana is up 2.8% today. All right. Fear and greed rising from 10 to 24. Rotation is starting to happen. All right. We got really, again, as I say, Bitcoin to the S&P is 0.65 correlation. Bitcoin to Russell, 0.72. Ethereum to the NASDAQ, 0.55. Bitcoin falls faster, 2 to 3 times faster than equities, but rallies 3 times faster when macro flips bullish. Okay? It flips bullish. Now, we got the cheat code in. We got the rate cut. That basically is the macro trigger to all this. Rate cut odds right now, we went from 95.35 back to 87, right? Bitcoin. 110 fell down to 80,600, sitting right now at like 91,000, right? Not a coincidence. Bitcoin moves in sync with rate expectations because I got people telling me that it doesn't. I don't know how they see that, but they left some comments yesterday. So please leave some comments again today. Do it. Now, when we had John Williams say that there's room for more rate cuts, right? What happened? Bitcoin grabbed on, okay? Like a cheap suit. It just grabbed it and put it on like a cheap suit and said, yeah, yeah. So how could you say that it doesn't react to liquidity? When John Williams said room to cut, rate odds exploded from, lows to 87% for the December, Federal Open Market Committee. Bitcoin immediately jumped 3% at that time. Okay, so I don't think there's any bear market here. Okay, I think that this correction was a flush leverage. I think that Morgan Stanley Capital International and the rest actually tried to plan this thing. It worked out pretty well. I think it's a reset happening, and I think it aligns perfectly with a Fed pivot and a Russell rally. So what do we got going on? Let's get into the short term because I don't want to spend like all day, day here. You just got to remember one thing. You got to remember one thing. Bitcoin is actually what we call digital gold, right? We've said that how many times before, okay? And really, digital gold plus tech. So we got what we're looking at, micro easing. Now, I want to take you over to what I think historically we have to look at. Bitcoin went up 20 to 30% in 1 to 2 months after rate cuts. Okay? Ethereum and crypto itself, stable coins, right now we got 312 billion. It's up 48% year to date. DeFi volume is up 11. Total crypto market cap sitting at 3.2 trillion. It's heading towards 4 trillion. The structure is ready. All right. Now, forget the bear whispers. This is a total buy the dip scenario, in our opinion. So let's get into it. All right. Let's get into the short term and let's talk about it before we spend an hour here. All right, Bitcoin right now, we said there was resistance at 93, at 94, it's still holding. We came up to the high so far of 92,287. Okay, so really there's going to be support sitting down, short-term support sitting down right over here at like 89. Okay, if that breaks, we're going to be testing the 87. What? As I see it right now, I think that we're in a channel right now. Marketplace is actually coiling. It's going back and forth. Really good. If you get into our pro group, we trade this thing bearish and bullish. And last week we had a 71% accuracy rate. Really cool. All right. So now as it stands right now, Bitcoin needs to get above 95. Okay. So here's the short-term targets. If we can get above, like, say, 90, let's go 95. We got the range between 95 and 100,000. Okay. It's not taking off right away. Ethereum, we'll get into that in a second, but I see Ethereum right around, if you can get through 3,500, it's going to 4,000. I told you that yesterday. Total market cap sits right now at 3.5 trillion. All right. What do I think upward? Well, Russell strength, Fed pivot, right? Liquidity expansion. Went all through it. IBIT. Assets under management right now, 68 billion. All right. So now, the only risk that we have with Bitcoin right now is if the Fed doesn't cut the rate, or, a Japan rate shock really caused 1.4 billion a wipeout. But really, on-chain metrics show that there's still sticky demand here in Bitcoin itself. So here's the bear counter. Okay, if just to give a balanced downside, because bears, all right, okay, there's a possibility, right? Because we trade reality, not really hopium. Now I believe everything I said, I believe is that it's moving upward. But if the Fed decides to pause, which is a 13% odd right now, Bitcoin I think could retest the support of the 80,600. I don't know. I don't think it's going to break 80,600. We could, potentially, could we see 78? Yeah, but I think that 80,600 is going to be it on the downside, because the data suggests that this is really unlikely, because we got unemployment that ticked higher. We got inflation that basically is kind of under control. We got credit conditions that are easing, and the FOMC speakers have leaned dovish so far. So this combination historically leads to the rate cut, not hikes. So the bear case exists, but probability weighted, it's, I believe, a low odd scenario. Now, if they do, if the cuts pause, we can, like I said, we could see the 80,600 retest. But with unemployment where it is and soft inflation, it's really a dovish win here. Okay, that's what we're thinking. All right, so key support Bitcoin 87,000 right now. A break below opens up 84, and of course we got 82,000 level below, and then of course 80,006 and lower. Now we need to get through the immediate resistance of, say, 93. That's the first gate. 95 is a bigger liquidity shelf. Above that, we can open up the door to 100,000. So right now, Bitcoin is stabilizing. It's not all clear yet. We just don't go bang the pots. We got some work to do. We got some wood to chop. But we need to get a sustained bid above 93 to flip from relief bounce to potential reversal up to 100. But structurally, still looks mid-cycle reset behavior right now. Let's get on over to Ethereum. Let's check out Ethereum. All right. Actually, before I jump over to Ethereum, this is what we're thinking about the Bitcoin. Buy the panic, buy the fear. Don't panic. Don't, right? That's what we're thinking about in Bitcoin. We got Ethereum that's actually showing some strength today. I gave you the clue. I said if we can hold this low, and if we can get through this top, here it is. It's still in play. If we can hold this low and get through this top, we're heading up to 3,500. Okay, that's my call. But right now we're just tracking around. It's actually really not doing much, but it is performing better. So Ethereum, Bitcoin broke its downtrend. Gas fee stabilizes after the Fusaka upgrade. Stablecoin volume jumped 10%. This is usually the beginning signs of a rotation into altcoins. But the key levels right now for Ethereum, all right? So Ethereum 2800 must hold, okay? 3,500 is the next target. A break above that, Ethereum could accelerate, we think, or I think, to like 3,500, 3,900 quickly. So if we can get above 3,500, we can accelerate to 3,900 quickly. It looks like early stage rotation behavior, the kind that typically happens right before alts start waking up. Let's go over to Bitcoin dominance real fast. As I said, I didn't want to really run that long today, man. I missed out on a lot of stuff that I'll cover tomorrow, but I wanted to give you that background, okay? So if we look at Ethereum itself, Ethereum Bitcoin itself, right? We could see that we are really just in the channel right now looking for a break outward where Ethereum actually led and had a 200% pump. Now, Bitcoin itself, as far as dominance is concerned, same old bloody chart that we've had up for a while. Really, we broke the ascending wedge, but it's still sitting. It's a little bit lower today at 59, which because Ethereum is actually taking a little bit of the spotlight off right now. So as it stands right now, we're still expecting Bitcoin dominance to come back up a bit, maybe even up to 60. Okay. But then you're going to slowly see capital leak into Ethereum and larger alt caps. So we're not fully in rotation season yet, but the setup is forming. All right. So altcoins are definitely in selection mode right now. Okay, so then it's not full alt season yet. As I said, we basically haven't even ignited the engines yet. But we're looking at Solana's up 2.3%, 2 to 3% today. L2 tokens are stabilizing. High beta alts are still weak. Really perfect for accumulation. Make sure you pick the right ones. All right, before we break up and end us today, like how do you join this crypto crew that I've been talking about? How do you get into the free group? Well, the link is in the description. You click this link right here, you're taken over to our pro Telegram trading community. We drop insane alpha trading opportunities. As I said last week, we were up 71%, but past performance does not actually indicate any type of future performance, right? So anyway, you gotta trade your own risk, that's for sure. We give you the ideas. If you want to take the trades, you can. Hey, if you want to go it alone, we offer two outstanding brokers, WeX, we got BTCC, okay? Right now, through our links, they give you some really, really good bonuses. However, I do suggest that you join our pro group, level up your trading, trade with us, all right? And remember, coming in January, we got something really, really special for you. So, crypto crew, really what I was saying is that we're not really in a bear market in my opinion. Make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we're crypto maniacs. All right. So really, in all, I'm thinking that we're not in any type of meltdown in Bitcoin. Okay. I went over the scenarios with you in the S&P 500. I do believe we got the cavalry coming in. M2 liquidity is going to come in. It wasn't a top. It was a reset before the next expansion. Liquidity is coming. Institutions are entering. Bitcoin and Ethereum are coiling. Alts are still on the runway. In January, again, we got something big coming for traders everywhere. So stay ready, stay strategic. Make sure you trade with your head, not over it. So what do you got to do? You got to join our pro trading community. We'll help you out. What else you have to do? You got to do your own research. As you know, I am not a financial advisor. I don't work for Merrill Lynch. I'm a trader just like you. And as a short-term trader, you got to read the markets and you got to enjoy the party, but dance near the door. I'll see you tomorrow. Cheers.